Well, we just had one of the absolute craziest weeks in the history of crypto, and it's not over yet. Unfortunately, it seems like there are multiple exchanges, not just FTX, that may be fraudulent. And at this point, it just seems like the best move is to take your money off of exchanges and to move it into wallets. As of right now, I'm making this video on a Saturday night. Two more exchanges, actually potentially three more exchanges, have all come up as potentially fraudulent, the biggest of which being crypto.com. I'm going to get into it real quick. All of this started with this tweet earlier today on Saturday, November 12th, by user on Twitter, J. Connor Rogan. He said, anyone know why crypto.com would send 320,000 ETH? 320,000 ETH, 82% of their ETH, to Gate.io on October 21st. And he has the screenshot of the transaction here. And then he says, next in the next tweet, and why Gate.io would send back crypto.com 285,000. Actually, they did send the full amount back here. I guess it was in two separate transactions. It was found later. So this raised a bunch of red flags. Why did crypto.com send 320,000 ETH to Gate.io, another exchange? And then if you scroll down, the founder of crypto.com replied saying, Chris right here, Chris from crypto.com, you can see he is the CEO of crypto.com. He said, it was supposed to be a move to a new cold storage address, but was sent to a whitelisted external exchange address. We worked with the Gate team and the funds were subsequently returned to our cold storage. New process and features were implemented to prevent this from occurring. What? You accidentally sent 320,000 ETH to the wrong wallet address? So this obviously set off a ton of red flags, and everybody thought, geez, this is like the most incompetent thing we've ever heard. I mean, seriously, sending 80% of your exchange's ETH to the wrong address, that's ludicrously incompetent. So even if it's not fraudulent, it's like, why would you ever trust your money on this exchange in the first place? But then it gets even more interesting. Another user, Schengen, tweets, confirmed, crypto.com accidentally sent 320,000 ETH to Gate.io on October 21st. October 28th, Gate shows proof of reserves and then sends 285,000 ETH back. So hold on. So crypto.com supposedly accidentally sent a ton of ETH over to another exchange, Gate.io. And then that happened to be when Gate.io was doing a snapshot for proof of reserves to prove, hey, all of our users, we have all of the money that we say we have. And then after that, they send it back. That sounds pretty damn suspicious to me. I don't know about you guys. And so then you have a question here with the CEO of crypto.com, and you say, okay, so either he's lying and it's fraud, and they're basically lending out this money over to Gate.io so that Gate.io can fake having the money in reserves that they don't actually have, and then they send it back. Or he's telling the truth and they accidentally sent a ridiculous amount of money to another exchange by accident. Either way, this is like disastrous for crypto.com, and the CEO has yet to respond. I will make an update if he does. I'm sure he will update tomorrow. But this is potentially criminal levels of fraud right here if this is true, and he's tweeting publicly about it. And then another thread comes out on Twitter. That's very interesting. And this is something that I've actually experienced myself. I've never used crypto.com myself, but I've known other people who have, and they've told me interesting things about how their order book works and how it's always a little iffy and it doesn't always make sense. And this thread gets into it. So the user Choo Choo Protocol on Twitter said that Crypto.com does not hold their assets one-to-one in their cold wallet, and that basically they have a fake proof of reserve system, and they're letting people borrow on margin tokens that do not exist, right? So how margin works is that you have a bunch of tokens from other users that are deposited, right? And then Crypto.com lends those out to other users. And that's called margin. And they're not supposed to lend out more tokens than they actually have. But unfortunately, it seems like they were doing so, and to egregious amounts, like as much as like 10x more than they actually had. And he gets into it here. So he's basically saying that Crypto.com have long provided liquidity to their order books, right? So this is saying that Crypto.com provides their own liquidity. So it's not separate market makers, which is often how exchanges work in terms of other liquidity providers and market makers providing the liquidity. Crypto.com themselves provides liquidity as well. So he says, if you raise the price slightly above other exchanges, a bot set up by Crypto.com will sell to you. However, so he's saying, like, say, you have a token that's worth $1 and then you place a bid at 101. Crypto.com will sell to you whether they have those tokens or not, is basically the allegation. And he's saying lots of exchanges do this, so maybe it doesn't really matter. But he says the important thing is that Crypto.com, which recently did the Merkle proof of assets, this is like the standard for showing your proof of reserves of assets that you have, doesn't actually have all the assets in their wallets. If you look at the order book, most coins are like this. And he uses Mask as an example. So he's showing that currently in the Mask order book, between the USD and USDT pairs, there's 147,000 Mask, right? And then he says, let's check Crypto.com's cold wallets. And he lists them all here. And he says that they only had a sum total of 17,000 tokens. So they have 147,000 in their order book and 17,000 in their wallet. So where did the 130,000 extra tokens come from? Well, they don't have them. It's fake margins. They're basically creating tokens to fill their order books that they don't actually own. And they can get away with it so long as a bunch of people don't try to all withdraw those tokens all at once. And so he basically comes to the conclusion that Crypto.com exchange provides a margin service to many coins that they don't have in their wallet. They loaned out huge quantities to their customers. He says, let me show you with AXS as an example. AXS is the AXI token. He said on November 8th, when FTX's bankruptcy became a reality, the margin table was quickly changed. They have a maximum loan of 100,000 AXS per person, but if you check the wallet, they didn't have that much AXS at all. He says even Binance, the largest exchange with the largest holdings of AXS, would not be able to provide 100,000 AXS loan to all their users. It's just not possible, right? So they are literally printing tokens out of thin air and faking their order books. So anyways, this is all pretty damning. And then on top of that, again, you go back to the other threads and it's like, hold on, you're accidentally sending money to other exchanges, or is it actually secretly fraud? We don't know. But nonetheless, this looks extremely bad for Crypto.com. So if you have money on Crypto.com, I would certainly move it. And also Gate.io. Gate.io is a much smaller exchange. I don't know if that many people keep money there, but if you happen to, I certainly wouldn't keep my money there either. So that's Crypto.com. And then just right after that, this is really bad. Guys, I would take your money off of exchanges. I mean, personally, the only exchange I have a little bit of money on right now is Bybit, but that's just like for active trading, but I keep a small amount. And I think Bybit's a pretty good exchange. Hey, I even have an affiliate link, full transparency. But by no means do I think you guys should be risking keeping money that you're not willing to lose. I have a small amount on Bybit just so I can make some trades. But the second I hear any whiff, I'm going to take that money out too. Not that I don't trust Bybit. It's just you can't trust any exchange right now. So full transparency. And then just now, we'll wrap up here. Huobi also released a snapshot of their asset reserved. But right before that, 10,000 ETH was transferred to Binance and deposited at OKX wallets. Or I should say after. Sorry, my mistake. So basically, they took this snapshot with all of their ETH, and then after the fact, after they took the snapshot to show their users, oh, we have all this money, they transferred it out to other exchange wallets. So again, it's just all raising questions. Hopefully, all these exchanges have the money they say they do. Hopefully, this is all a misunderstanding. This is confusion, whatever. But the standard that users are going to start holding these exchanges to is astronomically higher, because no one is going to put their trust in any exchange if FTX, which frankly, before this week, was, I think, pretty widely regarded the most trusted exchange by far. If they were faking and lying and fraudulent, then who the hell is going to trust anybody else? So, and why should they, right? We should hold all of these exchanges to a much higher standard. Binance did prove their assets, and they do seem to be legit. Obviously, they're the biggest exchange by far. They have a ton of assets, so Binance seems to be pretty safe, but everybody else is up in the air until all of these questions are answered. So stay safe out there, guys. I will have more updates as they come along. Follow me on Twitter, because I'm much more active on Twitter real time. These videos obviously take a little bit of time to record and edit and put out and all that. So I'll put my link to my Twitter in the description. Anyways, guys, thanks so much for watching. Subscribe if you haven't already. I will see you next time.